So we've been getting lots of questions recently about seller-paid concessions. Mark, can you take a minute and explain what is a seller-paid concession?
Of course, and thank you for having me. But a seller-paid concession is when a seller is actually paying some, if not all, of the buyer's closing costs. Now, you may be asking yourself, well, what are closing costs? Well, there's a handful of categories, but for example, it's going to start with your rate. Is there any money to buy the rate down? Because that's a possible option. Number two, that's going to be your third-party closing fees. So for example, your appraisal, title work, etc. Number three, that's going to be your escrows. If you choose to escrow with your mortgage payment, that's going to cover your property taxes and your homeowner's insurance. But we need to establish an account. We need to make sure that there's enough money in that account to pay your taxes and insurances when they come due. And then lastly, that's going to be your HOA, Homeowners Association. If you buy a home that has an HOA, there could be transfer costs. There could also be the option to maybe pay ahead a month or a quarter.
So this is a way that buyers can save thousands, because typically in a hot market, a buyer would pay for these.
Correct. Yep.
And right now, with interest rates being a little high, right, a seller can pay down a buyer's interest rate as part of those seller-paid concessions.
That is correct. Yeah.
Brilliant.
Yeah.
I'm Robert Crow of Remax Alliance here in Northern Colorado.
And I'm Mark Barnett with Barnett Mortgage, also in Northern Colorado.
Any questions, reach out to us using the information on screen.
All right, thanks.
Bye.